Couple preliminary comments. It's discussed why did Silicon Valley Bank go down, and I believe one person said they made poor decisions. No, we have a poor system. They made decisions that were consistent with the profit motive of the officers and directors of Silicon Valley Bank. They lent long, they borrowed from their customers short, they realized they had a mismatch, and that if interest rates went up, they could lose a fortune. They bought insurance against that and then sold the insurance at a profit, justifying bonuses to the very people who made the decision. If we do not require mark-to-market of securities that are held, we will have a bad system, and it will be in the interest of bank boards of directors and officers to make the same poor decisions. As to the matter before us today, I want to commend the ranking member for her bill to say, let's study this. There has not been the academic, but especially the government studies that I'd like to see. A couple years ago, I thought and said that maybe we should increase to $1 or $2 million, and maybe we should. But if we're going to go up to 10, or even consider up to 10, I commend the ranking member for her bill, and let's see what the impacts are. I'll point out that there are two ways that investors are made whole. One is FDIC insurance. The other, some of us remember from 2008, is government bailout. Mr. Norquist, I want to thank you for your consistent, if often mistaken, dedication to your ideology. I think the only thing worse from your standpoint than FDIC insurance is government bailout, because then the general taxpayers are paying and the people benefiting never even paid into any insurance system. We had before, we're here talking about non-interest-bearing transactions accounts, mostly at banks, but there's a rival, and that's the stablecoin, also a non-interest-bearing transaction account. We had a vote in this committee where I proposed we have a clear law, no bailouts for stablecoin. Every Democrat voted yes, every Republican voted no. Should we make it clear to stablecoin investors that they're not going to get a government bailout?
Well, I would certainly be in favor of bringing down the amount of available bailouts and the reasons for giving them. I certainly think that there are a lot of things in my written testimony. I go through some of the private sector solutions that exist even in Massachusetts, where I grew up before emigrating to the U.S. Real success in having, going back to 1934, to having private insurance. So when you've got the government so involved already with FDIC and going up to $100,000 didn't make things better, it made things worse. I would suggest we go in the other way and open alternatives.
I want to squeeze in one more item. One of the things about the proposed bill in the Senate is that every bank pays, but the biggest banks don't benefit. And that's, the question is, how will that affect us both on a sunny day and a deluge? On a sunny day, I don't think that businesses are going to take their money out of Bank of America if that's the closest bank. I don't think this is going to be a system that moves capital from the biggest banks to the medium or smaller banks. But if there's a deluge, then small companies that have $1 million or $2 million in a big bank are going to come before the American people and say, I did something reasonable. I had my money in the big bank. I need it to run my business. On the same day, the business owner across the street had his money in a smaller bank and is covered by FDIC insurance that my bank has been paying for. And with that kind of argument, and having been here in 2008, I think the big bank accounts end up getting bailed out by the taxpayer. Is it reasonable, I'll ask Mr. Ryan, to have a situation, not from the standpoint of the bank, but the standpoint of the small business, that if a small business has their money in a big bank, they don't get FDIC insurance?
The deposit system and confidence in that system is critical to the success of the American economy, and the numbers of small banks continue to decline. And I think FDIC insurance modernization helps, that decline from slowing for sure.